Good day, everyone. Thank you for joining us once again here at Seafried and Brew for our economic briefing. I am Jamie Sumner, Chief Analyst, and for this week's briefing, we just want to review over some of the information that's come out over the past week, of which we've had a lot. So we'll just briefly go over a couple of bits of that economic information. First, we want to start off looking at that Small Business Optimism Index, and this is something that we've looked at in the past, and we've commented on how it's continued to increase in here, and we see that trend kind of continue throughout 2018 when we see the upward trajectory. So overall, the small businesses are fairly optimistic about the current environment. If we look at those different components of that small business index, we can see overall there's continues to be an increasing in plans to hire individuals. That's a big positive. Capital outlays is at 30%, up 1 basis point, or changed from last month. So we continue to see increases in a lot of these different categories. However, when we look at inventories, we can see that has come down 2 points for the plans to increase inventories, and then current inventories also came down by 3 points. So we see this little hesitation of increasing the overall level of inventories. But in general, it's a very positive. We're at almost the highest level that we've been at for that optimism index. So that is positive. When we look at the producer price index, looking at that inflation, we can see the producer price index actually month over month change was negative, down negative 0.1% here. The survey was it to increase by 0.2%. So we've had a little bit lower than expected in terms of inflation on the producer side, and we see that follow through in the year over year change, where we have just a slight downtick in this inflation number. That change was a positive 2.8% year over year. The expectation was 3.2%. So we are under that expectation. That led to some changes in the overall level, that GDPNow index that the Federal Reserve Bank of Atlanta puts out, and we'll finish up with that. When we look at the producer price index, the consumer price index, we can see very similar to where it was last month at that 0.2%. In fact, if you look back over the past 5 months, for those 5 months was at 0.2. So consistency here, nothing too far out of the norm. When we look at the core CPI, that was up just 0.1%. So the producer price index showing a subdued inflation changes. The consumer price index similar in terms of expectations. When we look at the overall expected inflation over the next year, this is put out by the University of Michigan. We can see down here in 2018, we begin to fall off a little bit. Most recently, in the last couple of months, these numbers have ticked down a little bit, but still right around that 2.8% range. So we're still showing that expected inflation above that 2%, but we're starting to see that pull off a little bit. When we look at the overall retail sales, we can see that came in at just 0.1% month over month, below the expectations of 0.4%. And then we look at the year over year increases, though, and we're up by 6.6%. And this is the 4th consecutive month in which we're in excess of that 6% year over year growth rate. So we continue to see strides in that retail sales. Interesting, the non-retail or non-store retailers, their year-over-year change up 10.4%, and now they account for about 10.7% of the overall retail sales as measured by this report. So we see those e-commerce type of places, which we knew was coming, continuing to grow in the percentage of the overall sales, and now in excess of that 10%. Inventories, we can see, is up for July. This is a fairly delayed report here, but the total business inventories up 0.6% for between June and July, much higher than where we were back from May to June, where it was up just 0.1%. So we see the inventories a little bit starting to pick up. As I commented on that Business Optimism Index, we saw that pull off there, but overall in general, when we're looking industry-wide, we're seeing a pickup of that 0.6%. So that's a positive, should lead us a little bit into that third quarter GDP and provide a little bit of a bump if this continues. Again, this is July number, so we still have August and September to come out. When we look at the impacts of these numbers to the GDPNow, we can see at the beginning of the week when we looked at those inflation numbers, kind of picked down here to around that 3.7, 3.8 range. And now with the retail sales picked us back up, and we're now at that 4.4% GDP. So consistency here. We've been above that 4% for the most part of the projection period. So we'll see if this continues throughout September and into October, and up until we have the advanced release of the third quarter GDP. But it seems like, as far as the GDPNow is concerned, it's going to be another fairly strong GDP environment in this third quarter of 2018. Look forward to talking to you again next week. Have a great week, everyone.